Bitcoin emergency update. Have we got the trend reversal that we've been waiting for? Is this the point where trillions of dollars are going to pour into the crypto markets, driving everything parabolic, and we're going to have a trend lasting 4 to 7 months, which you can leverage? Well, that's what we're going to do and cover in today's video based on buying and selling behavior. So if you like today's content, like, subscribe, hit the bell notification. Today is a very important one. Share it with everyone that you know is in crypto, because it's going to be one of the most important Bitcoin updates that I've done to date. And if you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrencies. So let's dive straight in. All right, so in June I did a video, right? June 2021, where my channel was very, very tiny, only got 146 views. But this is what we stated in June, right? 7 months ago, literally, and this is important because this is the power of Fibonacci and Elliott waves and reading the markets like a pro. We said the market looks like it's doing a wave A, and then we anticipate in advance what's likely to happen is a wave A, B, C of a B, followed by what typically occurs is a 1, 2, 3, 4, 5 of a wave C of a wave 4. That's what we said in June 2021, based on Elliott wave Fibonacci buying and selling behavior. Well, look what's happened now. Look at this. Now we got the beauty of hindsight, but when we did the video in June, we was looking into the future, and what we're aiming to do is get the probability in our favor based on pattern recognition. How is the market, the mass herd psychology feeling? So look at this. Like, this is so important that we know how bang on this is. This wave B over here, look at this, A, B, C. Now it did exceed this high over here, which makes it an irregular type of correction. We're going to dive into that in a second. But then followed by this. We said this in advance before any of this happened. And look at this textbook, 1, 2, 3, 4, 5. And it looks like we might have this trend reversal. And that's what we're going to dive in to today's content. So this particular kind of correction, I want to touch upon it because this video was filmed in June. So there's a type of correction called a running ABC, right? ABC correction. That's a running correction. I've covered it in my course. And if you want to learn how to do this, I've got a free Elliott wave Fibonacci Masterclass, but it's called a running correction. And what I show over here, and I want to just show this to you in the lesson itself. So I've built a Fibonacci and Elliott wave course, and I break down a lot of the foundation, the intermediate, the advanced, how we are reading the markets ahead of time, putting the probability in our favor, knowing that we can only do probabilities and never certainties. So with Bitcoin, what it looks like is we've got this ABC structure that exceeds the previous swing high, which is what we're calling for Bitcoin a wave 3. And then we've got this wave C structure, 1, 2, 3, 4, 5, that doesn't exceed the former wave A. And if this is the trend reversal, this is referred to as an ABC running correction. And if you want to learn how to read the markets like a pro, like I do, so you're getting the edge in your favor, because I think we're going to have a 6 to 7 month real bullish behavior. And if you can kind of peg the lows and the highs, you want to take my Fibonacci and Elliott wave masterclass is in the link below. If you like it, I got a stupendous offer for my course. It's normally $997. We're doing an offer right now of £97, 90% off. It's ridiculous. And I cover literally everything for Elliott wave, foundation, intermediate, the advanced, to really understand waves within waves. And I simplify. I spend a lot of time just simplifying this complex area. And then how to combine Fibonacci ratios, price ratios based on human psychology, and wave 3s and wave 4s and wave 5 all have different relationships to each other. And you can actually peg with high probability in advance what's likely to occur. And that's what you saw in what I just showed you. But what we're going to do next is we're going to dive into Bitcoin, because this is the thesis. I did this update on June 30th and said, look, we've been saying this for a while now, and it's getting clearer and clearer. After this running ABC, if this is the low, we expect all-time new highs, and for us to hit a 6-figure Bitcoin, meaning 100K Bitcoin plus. That's what we're looking at right now. And really, I use Bitcoin as the macro indicator to let me know what's likely to occur with the rest of the market. So I think that was the last slide. Let's dive into a live chart. So this is Bitcoin live as of today, February 5th, right? 6 a.m., 7 a.m. UK time. And what we're looking at as a macro thesis, again, I want to talk macro first. because it's important, because I don't think a lot of people are looking at it like this. 2017 bull run, wave one, 2018 correction. This is a typical correction over here. It had a complex correction, wave two. Then we had this amazing surge hitting all-time new highs for a wave three. And what looks like now, now that we've got the benefit of hindsight, but we projected this, we anticipated this from June last year, when my channel was tiny, when we had a few hundred views per day. But look at this A, B, C structure. So this is the wave four that we're looking at. And then what we're seeing to finish off a 5-wave sequence is a wave five. And that's what we're going to focus on today. Have we seen the initial part of the trend reversal? It's quite early, but we can get some high probability indication if the trend reversal has occurred. And where is it likely to go? Where is the new high likely to go with high probability? And how long will it go for? Because that's important also. How long will it go for? Because Bitcoin is like an indicator for the rest of the markets. And when Bitcoin's moving down like it has been for the last, pretty much since November, we pegged this top over here. Everything's been crashing down, right? 30, 40, 50%, some 70, 80, 90%. And it's all based on speculation, fear, uncertainty, and doubt. So what we're going to look at, first of all, keeping it really simple, I'm going to pop into the top left-hand corner, my chart, weekly chart. What I want to look at is the momentum indicators. In fact, I want to pull up this one here. Is it this one? Yeah, this one here. Perfect. So what I've pulled up is two, right? Now I have two different settings. And really what you're looking for is the ones that marry up the best with these previous swing lows, right? But the key thing right now is that both of the slow and the fast, these are called stochastics RSI, are both now officially pointing up. That means the next 3 to 6 to 8 weeks, we should expect the market for Bitcoin to be sideways to up. That's the probability right now. So that's important information, is objective information. And it's also coinciding. We're going to jump in back into the daily chart. We're going to just zoom in over here. It's now coinciding with a really clean pattern, right? Look how clean this is. This is now in hindsight, A, but we were saying this with foresight also. A, we got this nice A, let me just get this arrow here, A, B, C of a B. And then we've got this 5-wave structure. 1, 2, 3, 4, 5. Even this wave 5 breaks down to a 5. 1, 2, 3, 4, 5 of a wave C of a wave 4. Now, again, we're anticipating it's a running ABC. Why? Because if the price doesn't exceed this low, and it has exceeded the previous high, one is a bullish sign. It's almost like it's overshooting. It's overshooting this high, and it's not coming as low as a typical ABC correction. So that's bullish behavior, which is a good sign, but we don't want to jump the gun. We just want to look at the facts. So what else, what other information do we have that can help us to see, is this a high probability trend reversal? If it is, what price zones is it likely to hit, and for how long? I'm more interested in the how long, to be totally honest, because even if Bitcoin goes from what today's 41,000, let's just call it 40,000 to 100,000, what's that? That's a 2.5x. Other coins, younger coins, low market caps and mid market caps are going to go up 10x, 20x, 50x. Some will do 100x and some will do a 2, 4, 500x, especially in IDOs. So now we might be moving into what's called IDO season. But what I'm interested in, we did this in previous videos. These price zones, these time zones, we had two really clear targets, and it looks like this one is holding. So the key piece of information, let me just get rid of this line here. Just want to clean it up because there's a few bits that I really want to focus on. Let me get rid of this as well. All right, so I want to really focus on this wave C structure. There's something that W.D. Gann, one of the forefathers of technical analysis, said it over and over again. It's, what we're going to look at two cases, right? With this whole movement to the downside, what's the biggest move that we've had to the upside, right? In this sequence, right? Let me just put this arrow here. So it looks like this wave 4 is the biggest, right? If we can agree that, right? From the low to the high, even if we just do it vertically. As my friend Hitesh says, longitudinally, which is officially a word. We thought it wasn't a real word, but it is actually. We put it in the dictionary. But look at this recent move. This recent move to the upside is in 3 legs. You want to be aware of that. Is bigger. Now, only by maybe 10, 20%. But this is what you call an overbalance of price. It's one of the first indications that we might have our trend reversals where for the first time during this whole sequence, the move to the upside has been bigger than any other previous move to the upside. And this was the previous biggest. And now we've got a bigger one, right? So now, again, we don't want to jump the gun. We don't want to get overexcited. We want more confirmation. What I would love to see over the coming days and weeks is for this swing high to be exceeded, for this swing high initially to be exceeded, and then eventually the all-time high to get exceeded. All right, these are the confirmations that I would love to see. I would like to see some real follow through, a bit of a correction, and then another follow through that's quite explosive to the upside. That's what I'd love to see. So what I want to cover here now, a couple of things. Again, we are going to do a bit of speculation, but it's following textbook Elliott wave and Fibonacci ratios, price, time, and everything else. So let's just get rid of these lines. And again, I really highly encourage, take my free Elliott wave and Fibonacci masterclass. It's all about the wave structures, what relationship wave 1 and wave 3 have to each other, wave 5 to the relationship of wave 1 to 3. We're talking about momentum indicators. We're talking about typical price zones and the 3 key Elliott wave rules that you want to be aware of. And one of which is wave 3 should never be the shortest out of waves 1, 3, and 5. Really, really important to know because it helps us do accurate wave counts and basically measure the psychology accurately. So what I want to do next is first let's play devil's advocate and say, if we're wrong, what's the minimum that we should expect, right? What do I mean by that? Okay, even though there's high probability that we're going to get this trend reversal and start seeing Bitcoin take off, which will really give optimism to the entire crypto market, we also want to be aware that we can be wrong. So after every 5-wave sequence to the downside, the minimum that should occur is a 3-wave sequence to the upside. And the typical ratio, I'm going to get rid of this now. The typical ratio, price ratio, is 50%. So if I just tag this low, let me just make sure I got the low. All right, so we're going to take this here to here. All right, so the typical, come on. Let me just do that again. There we go. It was this line, but I just need the particular ratios. The ratios I want are these 3 over here. Right, 50%. 50%. Let me just do that one more time. So I did it the wrong way. All right, let me do it from here. We're in a bearish market, bearish trend over here. We're going to go from the high to the low. High to the low. There we go. That's it. That's what I want. Bang. So the typical price zone as a minimum that we should anticipate, keeping in mind that the weekly momentum is now bullish, is $51,000. $51,000 Bitcoin in that range. How long should that typically take? As an absolute minimum, if we're being very conservative, is 38.2% of how long it took for this downward movement, but more common is 50%. So that we're talking about sideways to up, 2-3 weeks, 24th February to the 1st of March. So we're talking about 4 weeks, right? 2 to 4 weeks, sideways to up. Now, initially, we've only got this little move up, so we don't really need to worry about anything. Again, keeping in mind that a weekly momentum in the top left is bullish. So we go sideways to up. That coincides. It's a confluence of events. That's objective, is mechanical. And then also on a daily chart, the momentum, we've got the bullish reversal. So we should be leaning on the side of sideways to up, but then we want to be hyper aware of what is the pattern looking like if this price zone is reached, right? So that's our conservative. What if we're wrong? What's the minimum that Bitcoin should do? It should achieve 51 to 61,000. Doesn't mean we're out of the woods yet. It just gives the initial indication. But we have to make a decision today based on what we believe is going to happen tomorrow. Because if we wait for tomorrow, then we're going to miss out on between today and tomorrow, if that makes sense, right? We have to have a thesis, have a thinking, have a business plan. But again, there's always probabilities and never certainties. So what I want to finish on today on this macro thesis thinking is, okay, Gia, if it plays out this way, if we kind of go back to what we said back in June, we said this, all right, we've pegged this. If it now plays out like we've been anticipating, which is like this, what are the typical price and time zones that we should anticipate and that we can use to leverage what we think is going to occur? All right, there's a couple of things. I'm going to keep it very, very simple. When wave 4 is simple, now this wave 2, right, where we're calling back in 2018, is a complex correction, very long, it's drawn out, it's overlapping. It's hard to know when it's going to end because this is the typical ABC, but it just carried on going, carried on going, carried on going, carried on going. When that occurs, wave 4 tends to be simple. A, B, C. Very clear, very simple in the sense of the wave structures are much more simple. Then wave 5, when wave 4 is simple, typically is less in time, right? Less or equal to in time than the wave 4. So what we can do is this. Let's just get rid of some of these. We can get rid of this now. We know this. We'll just get rid of this data over here. We'll get rid of this. And we're gonna, I'll leave these here, yeah, because we're not out the woodwork yet, this information. So what we're gonna do is we're gonna measure how long did it take for this wave 4 to occur. Let's just assume for today, as we got the initial signals, not the confirmation, but the initial signal that we've got the reversal of Bitcoin, the trend reversal. How long has it taken? Well, we pegged this top over here. We did a video back in, when was it? April. And we've pretty much pegged this bang on, right? Bang on. So it's April 19th, give or take. April 12th, this high. And then today's date is the 5th, but really this low is 22nd of Jan. And we're literally just measuring it. And we can use a tool called, what is it called here? Trend-based fib time, right? We're going to measure this. We're going to click on the top of wave 3. We just want to get a date, right? And then the end of wave 4. And again, it's not confirmed. This probability is never certainty. So important. And then we're going to double click and project forward 100%. You can see it's off, literally off the charts, off the screen. All right, this is 100%, this green line. What's the date? Well, that takes us, let me just double check that. April. Just make sure I got that right. Bang, bang. Yeah, that takes us to October. Late October. Is that right? April. let me do the old school, right? April. We got May, June, July, August, September, October, November, December, January, and we're into February. So we've got 9 months. 9 months. Yeah, 9 months. 9 months. So it should be less than 9 months, right? Less than 9 months. That's what we're saying. So what that means now, we've got a good indication of before October, end of October, we should have the wave 5 complete if it plays out the way we're anticipating. So that's time. Now let's just go, all right, Jagir, what about price? We're anticipating a 6-figure Bitcoin, but can we base it a bit more on the psychology of what's happened so far? Can we just measure some of these and let's be conservative and optimistic? What are the ranges? So what we're going to do is something very simple. I cover this in the Elliott Wave course and the Fibonacci course. In fact, let me show you. I think I got it open. Have I got it open? Yeah, I've got it open here. If I just show you this, I think it's important, just so you know what you get in the course, because a lot of people are buying the course and loving the course. I'm getting some amazing feedback. But what I want to look at is the end of wave 5 target. I think it's in the advanced section. Yeah. So here, lesson 17, fib price extensions for wave 5. That's what we're looking for. And then lesson, because what I know is hard to remember these things. So I just made it really, really easy. 3 to 5 minute lessons. Literally just press play. Let's just mute. And what we're looking for is this here. We are gonna do this. I'm gonna do this live on Bitcoin now. Let me just show you like this. What we say here in this lesson is if we can measure the beginning of wave 1 to the end of wave 3 and project it from what we're calling wave 4, typically wave 5 is 100% of that as a maximum, right? So wave 5, let's just read it down here, this one here. This is one of the key ratios down here. Wave 5 will typically be 3862 to 100% of maximum of waves 1 to 3, right? I'm gonna do this live for you on Bitcoin in a second. But also what I've noticed in crypto is in the financial markets, wave 3 tends to be the extended wave, like the longest wave. But in the commodity markets, because of fear of missing out, because of the seasonal nature of commodities, it tends to be wave 5. And in crypto, because of fear of missing out, FOMO, the news, the social media trend and life that we're living in right now, and how fast news travels, wave 5 tends to be the extended wave. So what I found in crypto is 1.618 of wave 1 to wave 3 is a really important ratio also for us to be aware of. So now we're going to do this live on Bitcoin right now. So we'll go back to Bitcoin. So what I'm going to do, I'm just going to show it to you like this. We're going to measure wave 1 to 3, which is here. Bang. And then we're going to say, let's just say, I'm guessing here, the the software, which is TradingView, will do it more accurately. Let's just say this was 62% of the 100%, and we're going to add that on. And that's the ratio that we're looking for. So we're going to see the line should be something similar to this. So now what we're going to use is the trend-based fib extension. That's the name of the tool. Beginning of wave 1, which is from the beginning of 2017, right? And then we're going to go to the top of wave 3 and project it from the bottom of wave 4. We're going to do two ratios. We're going to do two things here. Let me just move myself back down here. The ratios that we want is 100%. 62 is, we're going to be aware of 62%, but we also want to be aware of 1.618. So now all of a sudden you can see, you can see this here, and then this up here as well, right? It's 1.618 of this entire move projected from up here. So this and this is projected up here, and that's what this ratio is. That's what we're saying. You see it's pretty much bang on. Now, this is a wide range, and we haven't got the information yet. It's as low as 74,000 and as high as 138,000. But also knowing that the last couple of weeks of a bull run, you'll tend to get this surge, like this from institutions also, because everyone has their own agenda in this game of Bitcoin, cryptocurrency, and markets. And the other simple ratio I want to do, again, I'm going to jump back into the course. I want to go to external retracements, end of wave 5 targets. Again, take my free early wave Fibonacci masterclass because you'll get a good flavor for this what I'm covering here. But I've tried to make it simple so you can use it as a reference also, because sometimes it's hard to, unless you've been doing it for a while, to have the information in your head. Again, I want to end of wave 5. Actually, I'm going to go here. Where are we? There we go. Fibonacci priced external retracement. I want the end of wave 5, less than 12, end of wave 5 external retracement. There's key ratios, but in crypto it's a bit different. It's a bit different. But there's a couple of things that I want to cover here. Let's just get to it. Bang. So what we're going to do here is we are going to measure this wave 4. What we're going to do is we're going to measure this wave 4. I want to show it to you like this because you're going to need to do this for all your portfolio to kind of get real targets. We're going to measure this, and we're going to take 100% of it, add 62% and 100 and 127%. These are these two lines over here. But with crypto, we also want to be aware of 2.618 external retracement. Really, really important. So now let's dive back into Bitcoin. Again, I covered that in a bit more detail in my masterclass, but to be honest, I'll just say buy the course. It's £97. I give away a lot of value for £97. I spent tens of thousands of dollars traveling the world to learn this stuff. So we're going to go wave 1, top of wave 3 to what we're seeing is the end of wave 4. And the three ratios, the two ratios I really want to focus on is the 1.618 and the 2.618. It's like a confirming indicator, and you'll see that we've got this ratio over here. So now, being conservative, we go buy or before October. Worst case scenario is right like the $80,000 range. I think much more highly probable is the buy or before October, the $110,000 range. But what I'm personally anticipating, just looking at the nature of the markets in crypto and the FOMO that it has. Now, also, I want to just take something else into consideration here. This is important. And I don't want to rush today's video. So I'm going to just measure wave 1 and project it from wave 2 and know that wave 3 was an overextended wave 3 at 2.618 of wave 1, right, over here. And now when wave 3 is clearly an extended wave, 2.618, wave 5 tends to not be the extended wave. So, we just want to be aware of that and not get overly optimistic and look at the worst case scenario as well. So we just want to be aware of these things. So now what I'm anticipating is a relatively comfortable 6-figure Bitcoin to hit this range, taking 4 to 7 months, like June, July, August, before October. But then just be aware of what happened and I want to show it to you this way, is what happened in 2017, right? 2017 market, these were typical top of wave 5 ratios. And I would have said here would have been a typical like zone, like a $6,000 Bitcoin. And in 2017, it just went parabolic. Like for a few weeks, it just went just to the moon. Like, excuse me, pretty much tagged $20,000. But most of that movement happened, if we look at it, from November 10th to December 10th, 4 weeks, right? Most of the move happened in 4 weeks. And we want to be aware of this behavior in crypto because it's not a mature market yet, right? Most of that move happened in around 4 weeks. And then we had a big correction, right? Big complex correction. So what should we anticipate with this coming potential wave 5? Well, we just want to be aware of that kind of movement where if we do get this wave 5 that we're anticipating, if it doesn't let me squeeze it more, that was the max. All right, if we do get this, like this, let's say it's like this, there is a chance there'll be a 2 to 4 week period where it just goes a bit nuts, right? Just almost vertical. And that almost, let's just say we did tag the 1.618, 140,000. Some people believe 200,000 Bitcoin. We don't know. But that tends to exaggerate the correction in terms of percentages. This is like the typical, and then it exaggerates the correction. Then I'm anticipating just the traditional ABC correction thereafter. It will kind of, we can cross that bridge if we arrive to it. But this is my thesis. This is my thinking on Bitcoin based on objective information. But we're not there yet. It's just now going right when we need a business plan with probabilities. So we go, okay, if this does unfold the way we're seeing it, especially if we take out this high, and also definitely the previous all-time high, if we do exceed those, then we have a lot more confidence in the market. So there you have it. I think we are cooked for today. We are cooked. There you have it. Today was a detailed one with Bitcoin, but I think it's important. Share it, like really share it. If you know anyone in crypto, let them know that, these patterns unfold time and time again. And especially if you've been patient for the last few months, because it's been really tough for the last few months, 30%, 40% down. If you've been involved in IDOs and younger projects, we're talking 60, 70, 80, 90% down. And it's purely because of how the market is feeling, the fear, uncertainty, and doubt, and the pessimism. But that will tend to now reverse, and then we'll get this optimism come back in. And if it does unfold, you'll get this euphoria phase. And it just goes parabolic. If you kind of experience 2017, but you need to be prepared in advance for it and not get caught up in the FOMO, the fear of missing out, and the greed, because greed overtakes, and then that's what drives the market. So if you like today's content, like, subscribe, hit the bell notification, take my free Anyway, in Fibonacci Masterclass, buy the course, get an invite to my private Telegram. We do workshops. It's Saturday today, so I got a workshop with my private community at 11 a.m. We're going to be talking more about Bitcoin. There's a few other things. We'll cover open Q&A as well, and I'm just looking to give more and more value. So let's finish on two quotes. First, the one off the top of my head is, "The trend is your friend. Ride it until its end, until it reaches its bend." So now, the trend, Bitcoin, I see always as the macro indicator, especially if you're into low caps, medium caps, top 50 coins, top 100 coins, coins that are not in the top 500 yet, but have high probability of being in the top 500 by the end of the bull run. Now that the optimism is likely to come in, we're going to have a higher probability of making good gains. But again, you need to really, really manage your risk. And for my book, we're going to finish on, it's a simple one, very simple one, Leonardo da Vinci. Simplicity is the ultimate sophistication. I don't watch the news. I try not to watch other people's analysis because sometimes it skews pure technicals of reading the psychology because there's cognitive dissonance. I want Bitcoin to go up, so I'm trying to stay neutral to say, look, just look at it objectively. Momentum, weekly and daily. Pattern, Elliott wave on a macro, wave 4, on an intermediate, ABC, on a minor and micro wave count, 1, 2, 3, 4, 5 of a C of a 4. So we've got that. We've got price targets. We've got typical price targets and price zones that have been met. We've got the ABC running correction, which we know is in time. And now also the time, because if you saw one of my previous videos, wave 2 and wave 4, when wave 2 is complex, wave 4 tends to be less in time than wave 2. So I think it was February 12th would have been the date. So we knew I was anticipating wave 4 to complete its correction before February 12th. So we're everything's lining up. And now we've got this overbalance of price in terms of the biggest move to the upside that we've had in the last few months, which is the first signal. It's a signal, probability, not certainty, that we're going to have a trend reversal, but we're not out of the woodworks yet. But we know the minimum expectations. But as the market unfolds, we'll review, we'll look at it and make objective decisions. So simplicity is the ultimate sophistication. And I like to keep the charts really, really clean, look at mechanical, objective information that I can rely upon and make business decisions on. And that's what I'm highly encouraging that you do with proper risk management. But the last 3, 4, 5, 6, 7 months, the following 3, 4, 5, 6, 7 months could be very, very fruitful. The market cap has been as high as $3 trillion in crypto, and right now is around just under 2 trillion. And I think it's going to get to 7 to 10 trillion in this bull run, because there's big money out there, big money waiting to enter. Either they haven't got the vehicle to enter, or they don't know how to enter, or the risk is too high, and they're seeing what's the best way of them to leverage this industry. And there's money out there that's looking to find a new home, whether it's in the stocks, whether it's real estate, whether it's just people's balance sheets, whether it's people storing it in gold and they're going, look, actually maybe I should store it in Bitcoin and other cryptos and so on and so forth. So there's a lot of things that are indicating that we're going to have a surge. We want to be ready for that surge, and also be ready for the end of the surge. That's even almost more important. But also now, if you're holding your portfolio, be ready for it to do well. It's not guaranteed, but it's highly likely. But then have your exit points in play. If you're buying new positions, again, just manage your positions, because the last this wave for April to now, so it's like 7 months. It's been tough. There's been downs, there's been ups, there's been downs. And now I think we're going to see what we saw in January, February, March of last year, where we had that massive surge. And even the end of the previous year, we had that massive surge. And there was an influx of money into crypto. So we're going to be ready for it and ready to pounce. So if you like today's content, like, subscribe, hit the bell notification, share this one, because most people don't see what we're seeing here. And if we can see it, we can act and anticipate. And if we can anticipate, we can increase the probabilities of winning. Take my free Elevate Fibonacci Masterclass. I'm telling you, it's going to give you so much value. It's free. If you like it, get the course. The course is practically free. It's £97. I can't believe how cheap I'm doing it. But you'll see, you're like, literally the feedback's been amazing. All right, that's it for today. Bitcoin emergency update. I'll see you soon.